Hey guys and girls, welcome to this week's Facebook Live. Now that we've got the camera all set up right, we're good to go. So I'm assuming lots of people that have lots of questions today. What is happening out there? Just realised I've got my rat's tail to the side here, and lots of questions about what's happening out there in the world. So I'll just wait as you guys hop online, and then I will get straight into it. So naturally, it is the 2nd of May, Tuesday the 2nd of May, 2023, and I am gobsmacked, to say the least, as to what has gone on today. And I want to give you guys my thoughts as to why the Reserve Bank or the RBA has put the interest rates up today, what it means for investors, and all those different things. So today, I'll start off with showing you guys this. This is the 30-day interbank cash rates future chart. This is what I've been working on now for about 13 years. When I started trying to draw the dots as to why the interest rates go up, why do they do the things that they do, how can you sort of prognosticate what's going to happen in the future, this chart was something that worked really, really well. And that stopped working in about 2020, and it has jumped around a lot over the course of the last 12 months and 18 months. And today it is broken. It is completely broken. So what I mean by this is that this here, as you can see at the top of the screen, was taken on the 1st of May, which was yesterday. And it shows that the RBA's official cash rate was at 3.65 or whatever it was. And the forecast was to be 3.59, which is very conservative there. And we can see that everything moving forward was underneath this blue line, which is where the RBA rate is. However, I don't have a printout of it now. If you go onto the RBA site, I posted a link to this in Birch feed early today. So cockedly from my side saying, hey, who's ready for no rate hike today? And they raised the rates by 25 basis points. I've got one thought or two thoughts really as to why this is going on. One is a very logical one, and the second one is more of a conspiracy basis. So we'll start with the logical one. So just for those of you that are tuning in now, check it out. This no longer correlates to cash rates that are happening. This did not predict it at all. There was nothing there to indicate. So it's gone completely out of course of what they normally do. So the first reason why I personally think they've had to raise rates, it is to do with the US dollar and Aussie dollar. If we look at the US dollar, it is dying very rapid and abysmal sort of death. I would have thought that the US dollar and all dollars would have failed a decade ago, but they didn't. They were able to keep this Ponzi scheme alive for a decade. However, it's dying a quick death. What is happening in the US market at the moment is that as the US dollar is dying, they're trying to jack their interest rates up to build more confidence, which is destroying the bonds that are out there. It's taking liquidity out of the market. And that's why we're seeing all these corporations go bust and all that sort of stuff, because there's a lack of liquidity out there. And the liquidity is a lot more expensive to take on that debt. Second part to that is that as they do that, their dollar becomes stronger. The problem is that if you have the US dollar getting stronger, right, and that means that every other currency would decline in its value. So it's a case of, which way do you want to die? Do you want to be shot in the head, or do you want to be stabbed in the face, right? And that's the way that we've got to take this bullet from, what's happening out there. So if they do not increase the interest rates here in Australia, and the US is increasing the interest rates to keep their currency because their currency is dying big time, what is going to happen is that the US increases their interest rates, but Australia keeps the interest rates low. What happens is the Aussie dollar gets pushed down. And as the Aussie dollar loses its value against the US dollar, that causes a new issue because any import that we bring in, and we have to use the US dollar as a base currency to convert with or trade with, that actually pushes the spread higher and creates even greater level of inflation. So for them to try and stop the inflation from getting any worse, they have to follow the US dollar. So it's because the US dollar is the base currency. So that is the logical understanding that I could put to it and the logical viewpoint that I could put to it. The conspiracy side of why it's happening is that they need to crash the currency and problem, reaction, solution. They create a problem. Wow, everybody's going to die. They create a solution. Everybody take this pill and you'll get better. And then everyone goes, well, please give me the pill, because they wouldn't have taken it if they weren't faced with a problematic scenario. So that scenario that could be introduction of a new digital currency, a cashless society, and all those different things in between. I got a text from my mate yesterday, very good mate of mine, and I haven't had a chance to call him yet and to talk about it, but he knows, if he's watching this, he'll know that he sent me the text. And he sent me a text and he said, I'm going to pull all my money out of the bank, right? And without mentioning any names, he banks with Westpac. Felt like saying that. And he goes, look at what they wrote, what they said to me. And he said that he went into the bank to get more than $5,000, and the bank said to him, you can't get more than $5,000 out. You've got to come back another day. And he goes, I'm going to show them who's the boss and going to close my bank account and take it to another bank. I'm like, mate, there's no point doing that because every bank is broke. They don't hold money anymore. I've talked recently about going to the bank and getting coins, and they only had $300 worth of coins in the bank, right? $300 of coins in the bank. And, you look out the back of the bank and they got nothing. I remember going to a bank vault once, and it was like a big armor guard sort of, not armor guard, it was a different bank. It's like a vaulting service, and they do distribution for banks and that. And I got to see the back end of it, and there was like $20 million sitting there, and it was just like little bits of cash on a shelf. Didn't look like much, right? And then I had to go out to all different banks all around Sydney, right? And these banks don't hold more than a couple of grand in the bank, right? And they're not going to give it to you, right? You ask for $1 million, you ask for 20 grand. What do they say to you? What are you spending it on? Are you under any duress? Is anyone forcing you to do this? All these different excuses, right? As to why you should not be pulling out the cash, like it's your own money, right? And that takes us to the different part of tonight. And is the money really your money, right? When you put your money into the bank, it is your money, but it's going into the bank. When you go to access that money, you're a creditor to the bank, right? So you're their liability. They have to pay you back that cash, but it's not your money, right? You have no right over that money. You just they have a right to pay you back, but if they can't pay you back, then they're bankrupt, right? And that's the world that we're in at the moment. So people look at risk and they say, well, I don't want to invest in the property. I don't want to invest in the shares. I don't want to invest into this because I'm worried about the risk. Well, when you look at what does risk involve, the biggest risk that you've got today is you not having your money when you go to want it. And that money comes in the form of purchasing power, comes in the form of you being able to access your cash. Like, who would have thought, like, when I went to the bank and asked them for cash, right, I just tried out something, right? I was just literally trying something. I went to the bank and asked for $1,000 of each denomination in coin, and they wouldn't give it. And they said, look, I can give you $50 of each denomination in coin. And it was like $50. It's like stupid, right? They sent me to a little machine out the front, put some notes in there, slow as anything. And I got like $500 or something, just for the fun of it, right? And the machine was empty. And it just goes to show that the banks, A, don't have the cash, but secondly, I overheard them say, due to the illness, we want to, thanks Mahesh, appreciate that, mate. One thing's for sure is that they're always trying to find a different excuse or a different boogeyman to blame it on. So, the lady said, we're trying to limit the spread of health concerns, and that's why we're not using the bank. And I'm like, are you really believing what your overlords are telling you, that it's because of, how many times has a penny or a coin or a dollar or 5 cents or whatever been to some illegal place, been gambling, been snorting cocaine, whatever, right? The money has been doing it for hundreds of years, but apparently we're meant to believe that we've got more people in our country than ever before. And this is not an Australian thing, it's a global thing. We've got more people than ever before. We've got more people using money. We've got inflation and more money circulating throughout the system. And, we're in a very conscious world of who's going to get sick and who's not going to get sick, that you're telling me that we can't have access to money because we might get sick from it. Go figure, right? Go figure. Got lots of articles here today to share with everyone. If you're not up with the times of what's been happening, I've got a computer here in front of me. I've got some great news for an update as well, guys. My podcast studio's got flooring going in this week. I had to get acoustic flooring and acoustic walls and all these different things. So podcast studio with a TV wall behind me and cool stuff is coming soon. So these videos will be super awesome. But here's just an article from the ABC News in the US. It says, the First Republic Bank collapses. JPMorgan to take over, FDIC says. So let's just go back. The First Republic Bank is the second largest bank collapse in history, right? I posted in a Birch feed the other day. If you're not in the Birch feed, go to birchfeed.com, birchfeed.com. It's free. No need to be a tight ass. Just go and register and you get into it for free. Inside there, I posted this funny meme and it was called like bankruptcy, bankrupt bingo, I think it was called, right? Bankrupt bingo. And basically it's a piece of paper and it has all the logos of the banks and it's got them crossed out as they're falling and going bust. So this is not normal, right? It's not normal. They're going to blame something, right? They're blaming Russia, they're blaming China, they're blaming whatever. But reality is, it's just a lot of Ponzi schemes that are occurring. There's a big issue that's occurring. As rates keep rising, the banks are going to keep falling. I'll share this later in Birch Feed. It's a video from Peter Costello, who used to be the Prime Minister, the Deputy Prime Minister of Australia. He's John Howard's sideman. Without exposing things that you shouldn't be talking about. I saw this video of these two guys. It was Costello and some ex-politician bloke. And they were talking about how the banks were going to go bust. The government debt was going to go bust. And then we did a bit of digging. Me and one of my mates were digging through just information about these blokes. And they are both supportive of a specific organisation. I might share that in the feed as well. But you've got the ex-treasurer of this country, which was the only treasurer to get us into a surplus. So he knows a thing or two about how the whole market works and the Ponzi scheme works. And he was talking about how the governments are going to go bankrupt, basically, and talking about how the debt bill for these governments, the government bonds, is going up dramatically, and the interest bill has gone up from like $10 billion to $40 billion, and it's probably going to go up to $50 trillion very, very shortly. So this is not just something that's going to hurt everybody on the street. We're continuously seeing businesses go broke, companies go broke. Now we're seeing banks go broke. We're seeing governments going broke. And ultimately, it's just because the currency is failing. So This one goes on to read, First Republic Bank has become the third bank to fail in recent months, and JPMorgan Chase will assume all of its assets according to the Federal Deposit Insurance Corporation. The FDIC said that the deal avoids the agency having to use its emergency powers, but would minimise the disruptions for customers. It comes in the wake of failure of Silicon Valley Bank and Signature Bank thereafter. So you've got to ask yourself, how does JPMorgan get all the money now to pay for these banks and bail them out? Is it because they've got the money just sitting there? Or is it because they're going and selling bonds and getting capital in that way, and they're using that capital to pick up all these assets for pennies and the cents? When the interest rates drop, it means that the loan books and the values of those banks will shoot up through the roof, and those banks become more profitable again, and the banks like JPMorgan and all that are instantly worth much, much more, tens of billions of dollars, hundreds of billions of dollars more worth of value is created during that time. So there will be an endpoint to this, but it's like, what disaster are they creating in the meanwhile? Under the deal, JPMorgan Chase is set to take on all of the deposits and substantially all of the assets of First Republic Bank. Question is, what is the asset of the bank? Is it the desk that they have at their front counter? Is it the computer that they talk from? That ain't the assets of the company, right? The assets of the company are your mortgages. The things that you are signed up to, they've strapped you to your car loan, your credit card loan, all those things. And their liabilities are your deposits that they have to pay back to you. So, speaking at the White House, Joe Biden applauded the government's effort to take over and sell the First Republic. You couldn't make this up. Regulators have taken action to facilitate the sale of the First Republic Bank to ensure that all deposit holders are protected and taxpayers are not on the hook. Taxpayers aren't on the hook, but what about the inflation genie that's going to pop out of the bottle there? Crazy, eh? First Republic Bank is the third US bank to collapse in recent months. As of the 13th of April 2023, First Republic had approximately $229 billion in total assets and $103 billion in total deposits. In addition to assuming all of the deposits, JPMorgan Chase National Association agreed to purchase substantially all of First Republic Bank's assets. The collapse of Silicon Valley Bank in March and Signature Bank shortly after prompted the widespread fears that the wider banking crisis could affect the global economy. So, the more they keep pushing these rates up, the banks are losing their assets, right? So just think about it. None of it makes sense, apart from if you're really trying to squeeze the market or there's a different sort of agenda going on, right? So they push up interest rates, households feel the pinch, they don't go and spend. We enter all our countries into a recession, those countries go into a recession and, they have to print a lot more money to get themselves out of that recession. The assets of the bank collapse, the banks collapse, the deposits disappear. What is the real agenda? Just question, right? Always just like questioning. Question. And no one's really asking these questions. Jonathan McKernan said from the FDIC board, released a statement early Monday regarding First Republic Bank's collapse. I'm pleased we are able to deal with First Republic's failure without using the FDIC emergency powers. These are bail-ins, right? These are bail-ins to the system, right? These aren't bailouts, right? They take all your asset, right? It's a grave and unfortunate event when the FDIC uses these emergency powers. Any decision to use the FDIC's emergency powers should be approached skeptically, taking into account unique facts, circumstances at the time with careful attention. They're literally going through and rolling all the bank's assets here. I'm just seeing here a comment here from Chris. It says, Biden rolled out the new mortgage policy to make people who have good credit ratings pay a higher mortgage and fees. To buffer the rates of those with poor credit score, the US has gone mad. Exactly, right? You can tell from all the different types of hair and different things that are going out there with people in the US or anywhere around the world that people have gone mad. The system is broken and it's definitely very, very odd. So that's something that I haven't got here as an article, but the US has just come out and made it. If you've got like a credit score of like 800, you don't get a special discount. If you've got a credit score of 400, then you get a special discount to help you out because you're so shit, right? And the thing is looking now at the system, If all these people are getting squeezed and they're becoming bad debtors, it means those credit scores are going to be terrible, right? So the expectation to get the credit, the availability for people to be able to get credit is going to become harder and harder and harder and harder. And eventually something has to change in that system. We're just replacing one old system with another one. I'm going to go to the news.com article here, which is my first one that was a printout. The RBA interest rates cash rate is increased by 25 basis points. I still can't fathom and get over the fact that this chart I've shown you forever, you can see here, it does not indicate or signify that we're going to see a rate hike. It shows that it was going to be on hold, no deal, right? It's not going to go anywhere. But today it increased. And if you're just tuning in now, just briefly, I said the reason why I believe that they've had to force it is that the US is increasing its rates. And I think the US is probably at its last rate hike. They're probably going to do one more rate hike this month, just looking at their data. Their charts like that keep going up. There's no reason why these should be increasing. But in Australia, if the US is increasing their rates, the US dollar becomes stronger. The Aussie dollar would slide, meaning that our exchange rate would have a greater gap between it. And that would have further implications on the economy, meaning that most obvious one is that as you're converting whatever you're importing, because we're a nation of consumers and not a nation of producers, so we're going to import things that we consume. All the things that we would be consuming would be going up at a much greater rate because of the exchange rate being, unbalanced. RBA interest rates, cash rates increased by 25 basis points. Homeowners have been a knife edge, and now the Reserve Bank has made its latest shock decision on interest rates. Australians have more financial pain inflicted on them as Reserve Bank Australia decided to lift interest rates by 25 basis points, brings the highest interest rates since April 2012. There is a big difference between the market today in 2023 and what it was in 2012 when interest rates were up. The big significant difference is we've taken on like 4 times the amount of debt as a nation in 2023 than what we had in 2012. I can read through this, but we all know the drill. Interest rates have gone up. And I found this funny other article that was here on news.com that goes on to say, Treasurer Jim Chalmers says that RBA move is a brutal reminder. Treasurer Jim Chalmers has been urged to overturn the RBA shock decision on rates amid fears that the latest rate hike could result in a recession. No shit, right? Go to any shop, go to any sort of, business out there, look around at what's happening in the markets, and blind Freddy, you could be blind and walking around going, wow, this doesn't sound like a busy shopping centre here. This doesn't sound like cash registers going, money jingling around, because there's a recession right in front of us, right? And I think that will get a lot worse as we fuel more levels of inflation onto people. But anyway, mid fears that the latest hike could result in recession, the government has been urged to take up the unprecedented to step into direct intervention. The RBA's decision to raise interest rates again beggars the belief and will smash renters and mortgage holders even harder than they've been smashed already. Here's a funny question, right? The RBA's where is it here? Belief that will smash renters and mortgage holders, right? So if you've got a smaller mortgage and you've got a larger rent, right, it's going to hurt the renters, but that money comes down and there's a bigger gap there for you to clip on the way through. I'll get onto that a little bit later. I've been on the calls probably about 8 clients a day, just on back-to-back calls. My team have been organising portfolio reviews with my investors. I speak to all my clients, whether it's from 5 years ago, whether it's from today, and I've been having these chats just reviewing what we can do to optimise our investors' portfolios. And the one thing I've seen, like I was on a call beforehand to someone, suggested for a $20,000 rent increase across the portfolio. Another one was about $6,000 worth of rent increases. And those rents were just turning up the dials, right? Turning up the dials. And I was like, the $20,000 rent increase is like a 1% interest rate increase. But if the interest rate increase has taken effect, today, and it turns over in 6 months' time, 3 months' time, whenever it turns back, it's going to have to. Whenever it goes backwards, that changes, right? But the rent stays at the new level. So there's a big opportunity there for investors. So make sure you are on top of your cash flow and managing your cash flow throughout your portfolio. Someone I spoke to last week was thinking of selling off some properties. They're like, things gone up a bit. Should I sell off, whatever? I was like, no, right? Once you sell off the asset, then you have no right to the cash flow in the future. And I looked at their portfolio. I think I gave a suggestion and a recommendation. I think it was about $600 a week extra, so about $30,000 a year, just by pushing some rents up. Like, let's send off some emails over to Blink and get these guys to put up their rents. And I believe that their rents have gone up about $600 a week, $30,000 a year. They're like, cool, that's great. Okay? That's the opportunity there. But these articles are coming out saying now that the government can control the RBA, right? You have the RBA sits above the government and they underneath, right? They might appear as that, right? But there's a little hand going in from different areas as you go up that system. And it's a very interesting time out there to see how this all unfolds, but exciting at the same time. Here's another article that I've got here. JPMorgan buys US First Republic Bank after regulators seize control. A $20 billion last-minute deal has seen the US largest bank buy one of its competitors in the second largest ever failure of an American bank. US federal financial authorities have seized California's troubled First Republic Bank on Monday, and sold it to JPMorgan Chase, hoping to bring a close a 2-month banking crisis which has spooked the financial system. Let me tell you, when I'm looking at these banks that are falling, right? When I'm looking at the banks that are falling, there is another 10 banks. There was 11 that could have fallen at the time that this one went under, right? One has fallen. There's still another 10 to go, which are in that red zone of the banks, which are most likely going to blow up. So this is just the start of it, right? And how do we get out of it? Do we keep making the bank's assets worth less and less and keep putting pressure into the system to blow these banks up? That is the literally quadrillion-dollar question, right? Quadrillion. So talking about quadrillion, I was going to say a billion, trillion, quadrillion, right? Remember when they're going up, it's like $100. You'd be a king if you had $100, right? When I grow up, I'm going to be a millionaire, right? $1 million doesn't buy anything today in the world, right? And it's just continuously devaluing the currency. Here's another article, right? If you're just a single homeowner and you owned your house, right, and you don't own any assets, you don't own any investment properties, etc. I nearly just threw out a very important article here, which is going to be my next one. If you're an average sort of homeowner, you got $1 million worth of debt, right? I've said for a decade more on these videos and YouTube and TV and stuff like that. I've said that it's important to have a solid foundation portfolio, right? Like very, very important. A lot of the time people get excited and they go through markets like we've just seen, and the market will show that, people go, I can make money doing this. I can make money buying land, building houses, all these different crazy ideas that they've got. But then when the lights turn on, the music stops, people start to realize that the chair is not there. Sounds like play school, there's a chair in there, right? They notice that there's no chair to sit on, right? And that's the sort of situation that we're at the moment. But if you have a solid foundation portfolio, the opportunity is that you've spread your risk, right? And the portfolios that I've built for myself and for my investors have been recession-proof portfolios. And not are they just recession-proof portfolios, like very clearly we are in a recession, right? We're in a recession today. And the properties that I buy from myself and other people, they're the ones that are taking off at the moment, right? So if you break it down for a second, right? Someone's going out to buy $1 million property, $1.5 million property. They're on the hook for having to pay that mortgage, right? $1 million loan, 2% interest before, 3% interest, 20, 30 grand a year. Who cares? We can afford that. Goes up to 6%, right? 7%. People are like, that's an extra 30 grand, 40 grand, 50 grand a year. They have to go and earn it elsewhere. But they can't go and ask their boss for more money because their boss is about to go broke. They've been laid off. They've got lower hours, all these sorts of things. So you've got one stream of income and you've got one massive amount of debt. That is risk that's stacked on top of the individual. But if you have, for the same $1 million, you have, say, 5 properties at 200 grand, you've got 5 tenants out there earning money. They have to go out every day, earn money, do what they need to do, bring back that money, give you a 30%, 40% of their income. Just think about this, right? If someone's renting your property and they're paying 30 or 40% rent, that's kind of like a tax, right? It's like a tax that just goes up in value, right? And that's a tax that you continuously get. It's a passive income stream. But if you just have to pay the utilities on your own personal property, you're in for a lot of pain. So the good thing is that if you're a property owner, you can go and shift off all your rents, shift up all your rents and push it on. But here's an article here, which inflation is hitting everywhere, right? It's from the Sydney Morning Herald. New South Wales government heads for a showdown with the councils over a multi-million-dollar fee hike. State government is heading for a showdown with local councils as it moves to stop picking up the tab for an annual hike to the controversial emergency services levy, which will see New South Wales 128 councils forced to collectively contribute an extra $76 million next financial year. As the new Labor government looks for ways to budget savings, it has uncovered an ad hoc system of funding in which the state government has covered annual increases in the levy for councils since 2019, costing taxpayers $100 million for the past 4 years. The new government would have to fork out an extra $77.5 million in the coming financial year if it did not end the subsidy system. So, just an interesting, I've got lots of extra articles here that I was about to throw out. So council rates are going up in a lot of areas. If you have one stream of income, you have to then cut that income into smaller and smaller amounts. If you have multiple streams of income, you can just keep increasing those income streams and use that to pay for your new inflated bills and expenses that are coming into your life. So just something to think about there. When people often ask, should I buy one property for $1 million or buy 5 for 200 grand a piece? You want to have more hooks in the ocean catching cash flow. This one here is very, very important for everybody to understand, right? This one here, I can't believe that I had the page stuck to another page, right? BBC article, and it says here, debt ceiling, Janet Yellen warns US could run out of cash by the 1st of June. Something really important for us to understand, right? It's the US debt ceiling. Currently, they're sitting at $31 trillion worth of debt, $31.6, $31.7 trillion worth of debt. And they don't have any more money. So they have to go back to the bank, being the central bank, right? And go and ask, hey, can I please have some more money? We'll give you a loan. But when they go to roll over this debt, right? She is one very unattractive woman, right? One evil person. If you think about, people go, oh, it's Biden or Trump, it's Liberal, Labor. Like, these guys don't run the show. There's people like Janet Yellen that does, right? And it's very, very evil. But she's going to sign up the US into a lot more debt, right? And increase their debt ceiling, right? I can see someone laugh there. They must agree she's ugly, right? Not ugly as in her looks, she's ugly as a person. But anyway, she has to now sell bonds, right, for the US to get them more debt, right? And then that debt will mean that it comes at a higher interest rate, right? They're not paying 20 basis points like they were a year ago. They're paying 400 basis points, right? That's like 2,000, 3,000% increase in that expense, right? So if your biggest expense was your debt repayment, well, then that's gone up by 4,000%, right? She's now selling because the US has run out of cash. So the minute that she starts doing this, the minute that the dollar dies even more rapidly, right? And I've talked about it earlier on. I said that these are things that we need to make choices, right? People are making choices when they go to the shopping centre. I've got $50, do I buy nappies or do I buy formula for the baby? Do I buy food or do I pay my rent, right? These are problems that people have, right? The decisions that the governments have are, do we shoot people in the back of the head or do we stab them straight through the face, right? I don't mean to be graphic or mean or rude or anything like that, right? But they're choices, right? If we don't increase our interest rates like we did today because the US is increasing the interest rates, our dollar is unhedged off the bond market now, and it is attached to keeping our currency from dying, right? I hope everyone understands the level that our currencies are all about to die. It's insane to fathom about, right? So if you had a business that was going bankrupt, right, would you go and get a big credit card and have a big hurrah, right, and spend up as much as you can? We're looking at everyone taking on this debt, and the debt is going to be so devalued when they get through to the other side of this that they're going to have to print so much more and create so much more inflation to fix up the cost of that debt and the bill. So this article goes on. Ugly Janet Yellen. She said once that we'll never see another recession in our lifetime, and a lot of people were thinking maybe she'll die, but she didn't, right? But she's still here. Funny that she either lied or she knew something about her health. US Treasury Secretary Janet Yellen has warned that US may run out of cash if Congress fails to raise or suspend the debt ceiling. Reaching a debt ceiling would mean that the government is unable to borrow any more money. On Monday, Miss Yellen urged Congress, that's why she's called Miss Yellen, because no one probably wanted to take her home, I don't know, urged Congress to act as soon as possible to address the $31.4 trillion limit. President Joe Biden has called a meeting of congressional leaders for the issue on the 9th of May. The debt ceiling has been raised, extended or revised 78 times since 1960. In this instance, the House Republicans have demanded drastic spending cuts and a reversal of some aspects of President Biden's agenda, including his student loan forgiveness program, green energy tax credits, in exchange for votes to raise the debt ceiling. This, in turn, has prompted objections from Democrats in the Senate from President Biden, who said that the issue is not negotiable. The president, however, is coming under increasing pressure from business groups, including the US Chamber of Congress, to discuss Republican proposals. It's interesting that they say the president is coming under increasing pressure from business groups, including the US Chamber of Congress, right? Business groups. So the president is the bitch who's meant to be the strongest man out there, right? There we go. And he is getting pressure from business groups, including the US Chamber of Congress. So you would think if someone had a business called the Reserve Bank of Australia, right, it'd be interesting. Wouldn't it be the government? Wouldn't you be sitting there going, the US Chamber of Congress? Isn't Congress government? No, but it says here from business groups, including, right? It's very important to look, when you look at the words and you say the sentences to yourself, you're like, hang on a second. If you go onto the RBA website, it says, we provide a service where we report to the Australian government and its agencies, right? So if you personify that and think, okay, let's say that the RBA was a person, right? And if that person was one other than Nathan, right? Let's say that I'm talking about myself. I report to Nathan and his agencies. right? It would mean that it's not me, right? So when you're sitting there reading these things and you think, hang on a second, when the Reserve Bank's website About Us page says it reports to the Australian government and its agencies, it means that it's not the Australian government and it's not its agencies, right? And then when you go and look at things like this and you look at the words, it's all out there. But people just go, oh yeah, it's just that recession thing. Let's watch Married at First Sight and watch Kim Kardashian's new face or bloody what she's put plastic on her face with, whatever, and buy some of her clothes that she puts out there and some fragrances that she makes, right? People aren't looking at this and people don't understand that it's all it says here, the Chamber of Congress, right? You break that up into two and it's a con, right? It's a con game, right? Anyway, I digress. A default, which would be the first in the US history, could upend global financial markets and shatter the trust in the US dollar as a global business partner. So when you sit there, and you think, okay, we're going to make decisions, right? Nappies or formula, food or rent, right? These are things families are having to deal with. We're sitting there going, okay, do we take away all the green tax credits? Do we kill the government? Or do we kill our currency? Do we lose our reserve status? What is going to give here? Because something has to give. It's not, it has to give. So a default, which would be the first in US history, could upend global financial markets and shatter the trust as a global business partner. Well, whenever someone says the US, I think of weak people. I don't think of a strong military and a force of not to be reckoned with, right? I think of like dudes that have been like turned into girls. And anyway, that's a different story. But we're thinking weak, right? I'm thinking third world country when I hear someone talking about, dealing with the US. And that's going to end up a lot worse than what it is. But for the moment, our currency, if we go back to why is interest rates going up, it's because the US dollar has to push their interest rates up and our currency would slide against it. So we have to make that move as well. But as I said at the start of this year, I don't care what happens to interest rates right now. It's what happens after it. And this year, I still believe we're at the end of the financial year, that we're going to see a reversal in monetary policy. We cannot have these banks failing at the rate that they're failing. We cannot see the governments fail at the rate that they're failing. We cannot see the businesses fail. Every time I log in the news, people sit there. The last 2 years you've been watching, everyone's talking about this person's dying, that person's dying, all that sort of stuff. Put a mask on, go and, put stuff in your body, whatever. Now you turn on the news and it's like, if it's not a sports star, something suddenly, you're seeing businesses suddenly collapse. Businesses suddenly collapse. Businesses suddenly collapse. And it's like these businesses, they can't all just keep collapsing without people asking questions. What is causing this to happen? And it's you need to be questioned. Being open, being alert to question with critical thinking. Right? Experts have warned that a default could also see the US head into a recession and lead to rising unemployment. Well, I think we're already starting to see rising unemployment out there. It'll also mean that US would be unable to borrow money to pay the salaries of government employees and military personnel. Right? Just like a corporate collapse, this is a collapse on a country scale, right? It wouldn't be able to pay social security. So everyone thinks a pension and you get the pension, the Medicare and all that. If ain't no Medicare, ain't no one got a credit card there for you, right? They don't have any cash at the back end of it, right? So it's not just your government. So I think this is somewhere where the social credit system will come in, and people talk about, is it going to be the CBDC? I think people may actually have the whole CBDC, which is a central bank digital currency, all totally wrong. I actually think the first rollout of central bank digital currency won't just be that people they'll be forced to use it. I think that it'll be a transition over the next, 6, 7, 8 years as we, enter to 2030, right? I think central bank digital currency will probably be an exchange between institutions and banks. right? The large banks and institutions throwing that money around, a way for them to be able to move that money could be through those networks, would be my thoughts on it. But yeah, interesting. That defence can't get paid, military can't get paid, government employees can't get paid, social security checks don't get cut, full on collapse. Even weather forecasts could ultimately be impacted, as many rely on data from the federally funded National Weather Service. Without going too far off topic, if you live in Sydney, live on the north coast, Sydney, wherever, last Friday, we saw so much rain on Saturday, but I saw in the sky just straight lines, right? They look like clouds, and they just start off as strings in the sky, and then they spread out, and then suddenly we've got a big storm. Anyway, when they ask about how you can determine what the weather's going to be, it's kind of like, did you guess what the weather's going to be, or did you create the weather? It's just interesting. I've always looked up. People don't look up at the sky enough, right? Look up at the sky, think, what is up there? What is happening, right? Because we ain't up there. We ain't seen all the things. You can see it coming in the sky, right? The clouds don't look like the fluffy ones that I was told to draw when I was at school in kindergarten, no. In a letter to the Member of Congress on Tuesday, Ms. Yellen said that we have learned from past debt limit impasses that waiting until the last minute to suspend or increasing a debt limit can cause serious harm to business and consumer confidence, raise short-term borrowing costs for taxpayers, and negatively impact the credit rating of the United States. Ms. Yellen added that it is impossible to know for sure when exactly the US will run out of cash. When in the history of your life do you ever read the news? This is BBC. BBC could stand for lots of big something or others, right? When would you see in these articles come out, them talking about alleged government officials, which Janet Yellen used to work for the private enterprise of the Federal Reserve Bank, but now she works for Congress, right? So they've installed this ugly, mean, sinister, evil person that funds the wars and installed her in the government. People last week were saying, here's something else as well. People were like, oh yeah, the RBA, the government's going to seize the RBA, they're going to put regulation in, it's going to be fantastic. That ain't for your benefit, guys. That ain't for your benefit. When they put the Royal Commission when they did the Royal Commission over the banks, that wasn't to protect you. That was to stress test and see the liquidity from all the banks and see what they could put up with, right? Think about it from that perspective. I saw it at the time, and it's like they did nothing. All they did was they, took a bit of the risk away, and it was there to stress test the system. But anyway, very, very bad, right? When would you have ever expected them to say that the government's going to run out of debt, right? Run out of cash, sorry. Debt and cash are the same things. Cash is trash, right? Cash is trash. You want assets, right? Because eventually this cash, the things that I've said over the years, they used to sound like, oh wow, Nathan's talking about buying a property and renovating it, right? But I realized for me to get to another level of, building up that asset base, it's not just a property game. It's not just buying a house, not just buying a unit. It is a banker's game. It is a finance game. There is a system there. I need to know the monopoly board that we're playing and moving the chess pieces on. Once you understand that, then the whole paradigm changes of this stuff. So it sounds crazy. These things might have sounded crazy 5 years ago, but we're here. We're in 2023. We're not all dead from a virus. We're not all dead from eating bats in China, right? Some people are, but that's for different reasons. But, we're sitting here talking about the largest companies in the world collapsing suddenly. We're now sitting there seeing about the countries collapsing suddenly, right? What caused this to occur, right? Anyone asking? I ain't seeing anyone talking. They're saying about what it could be, the boogeyman could come, whatever, right? I ain't hearing people in the news or the media questioning and trying to call out. I'm demanding, why did this happen, right? You haven't seen anybody in the media doing that, right? Because no one's even asking the hard questions, right? So as an individual thinking, okay, should I take debt? Should I not take debt? Whatever. You should be asking yourself these questions like, Did they just suddenly wake up and go, oh, we've got no debt, we've got no money, we can't pay? Like, you would have seen a problem with your system beforehand. But the problem today is just the funding is not there. They've pushed the cost of funding up so high, it's blown up the banks, it's blown up everybody, right? And eventually it's got to be saved, because the loans, the only assets that are out there, the asset is not your property. You think that your property is your asset. The property is not the asset. The asset is the mortgage that's attached to your property. And even if you say, I've got no mortgage attached to my property, the asset is your neighbour's mortgage. The bank owns the asset of your neighbour, and the asset is the value of your neighbour being able to afford that property, because they've had a game for them to play by playing in that fiat cash Ponzi scheme. So it's very deep, very interesting, and I'm very excited still. Her announcement came the same day as the Congressional Budget Office, CBO, reported that, don't you realise that every single commie organisation has 3 letters in it, right? The BBC, the ABC, the ATO, all these different entities, right? The CBO reported there is a significant greater risk that the Treasury will run out of funds by early June. The projection of the exhaustion date remains uncertain. However, because the timing and the amount of revenue collections and outlays over the coming weeks are difficult to predict, the Treasury plans to increase the borrowing through the end of the quarter, ending in June, totaling about $726 billion, about $449 billion more than projected earlier this year. Officials have said that this is partly due to a lower than expected income tax receipts, because no one's making any money. High government spending and a beginning of quarter cash balance that was lower than anticipated. In a joint statement on Monday, Democratic Senate Majority Leader Chuck Schumer and the House have said that the US does not have the luxury of waiting till June the 1st to come together, pass a clean bill to avoid a default and prevent a catastrophic consequences for all our economy and millions of American families. So when we sit there and think about it, right, it's the 2nd of May. Right, we're 1 month off the US having no money, right? The credit card is maxed out, right? The US credit card is maxed out. And this isn't just a US credit card, because the US has no money, then they can't throw some cash here and throw some cash there. They're contracting. What is happening to all the other financial markets around the world? They're, right? And that's what we're seeing at the moment. And they start printing more cash into the system. I'm going to call it cash because it's not money. Cash is just a trashy word like currency, right? It's just interesting. As they print more cash and liquidity in the system, we're going to see this liquidity flow out to all other markets. Anyway, I think I've made my point with this article about the US debt limit. When was the last time you saw headlines like this? Getting rocky. Big Four bank boss sends grim prediction of fate for Aussie businesses. So everyone thinks it's all about, my mortgage, right? What about the business that can't operate? We've just seen that America can't operate because they don't have any capital. They've got no liquidity sloshing around. The people don't have the money sloshing around, right? It says here, imagine what's going to happen to the businesses. The boss of Australia's biggest 4 banks is urging business to brace for impact after delivering a grim economic outlook for the years ahead, despite the nation's inflation rate dipping by 0.8% from its December peak. The ANZ chief Shane Elliott believes the financial strain of the business will continue for some time. Speaking in Queensland Finance Leaders Luncheon, Elliott addressed the cause of inflation and the fallout for the cost of living for having unprepared businesses. Unprepared businesses. Equipped to deal with the events to come, heightening the risk of going under, and explained today's high inflation come across the crisis of excess opportunity. Australia is a little unique. A lot of our customers have never been through something like this. These businesses were set up in a different environment of low interest rates, and many of them don't have any experience on how to deal through this. Consequently, it is feared a number of young businesses will be forced to shut their doors while older companies thrive due to their exposure to similar economic conditions in the past, right? So look at the opportunities, look at the things that could happen. It's looking for that data, looking for the opportunity, and planning for that, right? And we're planning for this. So I was able to retire in the GFC, right? People have been planning this to capitalize on this opportunity. So people who have this business model that's not set up for this kind of event, they're what's been flushed out at the moment through high interest rates. The Australian Chamber of Industry and Commerce, blah, blah, Deloitte's, where are we here? Just reading through, see if I'm going to be wasting your time by reading this here. Here we go, this one looks a bit interesting. Every time you've had that in the US, you've had a recession. Wait, so here we go. According to the global think tank Conference Board, the United States leading economic index saw a 1.2% decline in March, lowest figure since November 2020. The inversion of the US Treasury yield, right? And that's what I've been talking about for a very, very long time, is the inversion of the yield curve. Generally after about 12 to 17 months after the inversion of the US Treasury curve or any Treasury curve, you see a recession. So if the bond, for example, for a 10-year bond is at 5% and let's say it's at 3%, and let's say that the 3-month bond is at 4%, you've got a bigger return coming on a 3-month lend. So the money is going to the shorter market with a greater return rather than taking it to the longer market with a smaller return because the risk is attached to that trade that you're doing. So at that point, all the liquidity sucks out of the market because the money for the big term loans of 10 years and 30-year bonds is going to the smaller markets, the shorter term markets. That's what causes the liquidity squeeze. So, this is going on to say that. It comes after the IMF released its World Economic Outlook. So, once again, the IMF, 3 letters, released its World Economic Outlook, WEO. You look at the World Economic Forum, the World Health Organization, they're all, 3-letter things. Earlier this month, warned the world was lurching towards a nasty recession with the risks of skyrocketing for richer nations, including Australia. So about 5 years ago, if you Google this, GFD, what is a GFD recession? It's the only thing on Google. It's called the Global Financial Depression. I made videos on this in 2018, talking about what would come. And we're here, but we'll print through it. We'll get through it. The way we'll get through it is by printing more money. That money has to be cheap to come out. Anyway. Moving right along. Another article, that's the bank that went bust. We've already talked about that. The Senate inquiry examines the impact of bank branch closures in regional areas. Have you been to your bank lately? Have you been looking at what's happening to the banks in the local area at the moment? They're closing rapidly, right? The entry and exit points are disappearing. So you can't get access to your cash. You go to the bank, I want to get 100 grand. You can't get 100 grand. You can only get 2 grand. What do you want your 100 grand for? You don't need 100 grand. Are you under duress? Is someone threatening your life? Is that why you have to go get that? These are the questions that they ask, right? So if you can't get the money out of the bank, you can't put the money into the bank. That means that the money is locked out of the bank. And if you're using a digital system, it means that the money is never yours because it's trapped inside the bank. It's all just a token between the different banks. And that is a dangerous position for everyone to be in. So let's read through this. A full impact of the closure of bank branches across regional Australia has been revealed in a Senate inquiry. Despite locals in a low income, I just thought about it. The bank branch is becoming the blockbuster in the Video Easy, right? Your bank branch is the blockbuster in the Video Easy. Go take a photo, go take a video for old time's sake, because you'll be telling your kids, your grandkids, whoever, in the future, for 5, 10, 15, 20 years, there used to be a branch and you get a little piece of plastic with a dead criminal printed on it, and then you'd go and give that to someone else and it's worthless, but we had a belief system in it, and now you've just got digital credits and you tap the phone and you attach it to your other phone and all these different things, right? Where are we here? Just desperate locals in the low income part of regional Victoria have detailed how the mass closure of bank branches in the area has negatively impacted the community. A Senate inquiry into regional and rural bank closures was held in Sale, eastern Melbourne, on Thursday, where local government officials and banking executives unpacked how the move to digital banking has impacted small communities. More than 300 bank branches across Australia in the last financial year, with 95 of those in regional areas. Chief Executive of East Gippsland said that the region has inconsistent internet signal, which makes a pivot to online banking difficult for some locals. Regional Australians are not FIFO residents, fly in, fly out. We live here and we thrive here, and we urge the banks to reciprocate and invest in us for our regions as well. Internet has been very intermittent, not intimate. One of those things we put in the submission is that the internet condition is subject to power outage. The median household in the East Gippsland is 1,100 according to the blah, blah. Yeah. So there's other people complaining that they're screwed because they're stuck in this system. Here we go. So this week, I don't even know, like I've given up on the amount of companies that are broke. Every week there's like 5 builders, 5 buy now, pay later companies, 5 retailers for dresses or some shit. I saw, there's like 5 food companies dropping every week at Providor. They're just dropping. Every time you go on the news, is a sports person dropping dead, a company dropping dead, or something dropping dead, right? And it's, this one here was just an article which my team put out for me, saying that a company called One Pay collapses, right? All these buy now, pay later. Why is that happening? Right? These companies don't have access to the liquidity, so they don't have the stock for them to sell. So people say, my core business is a buyer's agent, right? And I still do the deals for my investors. I buy them and locate them and negotiate and all that stuff, get in below market value for you guys. And I was at a lender, right? I was talking to a lender. I got some money from a lender, I don't know, a year ago, and I've got some money. I've been getting some loans from places. And I think about it, I think, okay, where does my lender get their money from? They go and borrow the money from someone else. They're taking it from this person over here and they're handing it to me, and I'm paying them a fee on top of that, and that's how I get my money, right? And then I look at it and I think, okay, if that's how a bank works, right? If the bank borrows its money from over here, and these are lenders that are getting it as real cash, they're not going out and getting, bonds and packaging up collateralized debt obligations. They're, getting private funding, and then I get the funding from there. And I look at that and like, that's cool, right? You're paying, you're getting something, everyone's happy. And then you think about it and you see all these finance companies which have got, they do short-term lending and stuff like that. And it's like, these companies make their money from renting out their money, right? Why is OpenPay going broke? Why are these buy now, pay later companies going bust at the moment, right? Would it not be that everybody needs to use them right at the moment? But they're collapsing. Why, right? And the reason why they're falling is because they don't have access to stock, right? What is the stock, the inventory that these companies are selling? They don't have access to liquidity because they can't get the money to go and rent out to people. And they make their money from doing that transaction by borrowing the money from over here, handing it to this person, getting a little clip on the way out, and then paying that investment over there to the person on the other side. That person, entity, whatever, hasn't got the liquidity to hand into this entity, and we see the problem that is arising there. So every week, keep an eye out. Maybe send us a message if you've seen a business gone broke. Share with us, because they're out there, right? I should have, do you know when you watch Star Wars and they come up with like all the credits of all the people on the screen? They go, doo. I don't even watch that show, but I remember it had lots of credits. We could literally put down all the businesses that are folding at the moment. And I don't say it with cockiness, right? Because, it's a very sensitive topic out there for a lot of people. It causes a lot of pain, and I always get upset and I get scared. Not scared, but just like, think like those people that worked at the company, they've got families, the entitlements, the things that they had, they're in a financial bundle. But out of that position, A, becomes opportunity, and B, something has to happen and something has to change, right? if it didn't work, then it was a flawed model to start off with, and you had to go back and fix something with that, and leaves, it's like a fire comes through, burns everything, and then leaves the opportunity for all the new regrowth to come through, and everything's beautiful again after it's been burnt. And that is the world that we're living in at the moment. And you need to make differentiation and make the acknowledgement and go, well, this is very obvious that something is wrong here. What caused that? And what can you do to protect yourself from that occurring to you? And some things you can go back and fix those things. Some things you can't go and fix those things. And that's just the world that we live in. So on that note, I might have some questions here from you guys. I don't know how to get to all the questions. I was told to turn my computer on and look up the questions from you guys. So I'm going to try my best to get to them. I'm just going to go straight to the phone. So throw your questions through if you've got some, and I'll answer them for you. Our government is required to have a referendum to change our currency. Our currency was enacted in 1966 when we changed our currency from the imperial system, the metric system, and we're using the dollars instead of the pounds and the pence. What have we got here? Theo said you need to check the facts. Mortgage loans are not banks' money. It's printed by the Reserve Bank as required. Exactly, right? I didn't say that it's not, right? This money is just funny money, right? Sometimes people come into my videos and comment on my stuff saying, dude, you don't know what you're talking about, and the economy, it's all fake. And it's like, I agree. I agree. I'm saying that. So it's good for someone to pop in for 2 minutes and make a comment. Lisa just said here, I could only get $60 out at an ANZ ATM a few weeks ago. Look, $60 could have got you a good night out going back, a couple of years ago, and $60 would probably pay for the schnitzel, and for one person at dinner now. So what do we got here? Janine, they want to collapse the dollar so they can put us on the digital currency. We won't have an option but to accept it 100%. We're pretty much in a digital currency because you don't have access to your own cash. What have we got here? Chris says, I think CBDCs will become the norm. They will ultimately use it to direct spending and enable negative rates if the economy requires it. 116 currencies currently in developing their own CBDCs, including the IMF, who is currently publishing the CBDC handbook. Exactly. We are going to a digital currency. Our currency is digital. We're going to be forced to use it. They will not call it a CBDC. They will just say, hey, our dollar has been changed. We've done this to protect it. This went wrong, blah, blah. And that'll be very fast that it will happen, and they will still call it a dollar. I don't think they're going to change and be like, okay, we're going to park the dollar over here and we're going to do something here. They're just going to flick the switch. And it takes me to something that I've been noticing every Friday, right? These things happen on Fridays. The banks collapse on a Friday. They've got the whole weekend to close the markets, right? It's like they know that it's going to blow up. They put it into palliative care. They wheel it off, put it over there, wait until Friday, 5 o'clock. They've got all weekend to work on it, right? And then on Monday, they go, oh, this has just happened. This is all okay. We've done this. This is all good. 1, 2, 3. If you or I closed a market, or you and I closed something and did something like that, it would be insider trading. It would be fraud. It would be all these sorts of things would be locked up without the key. But these guys have the power to go and manipulate and make these things all good. So someone said, show me the radio, show me the second. It's getting long. It's been 2 years since I've been growing it. It's getting really wild. I said I won't be getting a haircut until I shave it off. I had a mate's engagement party the other week. May have been a surprise wedding, I didn't know, so I just got a haircut, made myself look alright. And I'm going to shave my head. It's all going soon, right? It's all going soon. I just need to wait till I lose a little bit more weight. So, Sam says here, it seems like they are rising interest rates aren't having a massive effect on the prices. Seems like now is the time to buy another property while people are fearful before the rate cuts. I'm tempted to buy now, but we will see. Exactly right. So if you're looking out there, everyone's sitting there going, I'm going to wait until the market crashes, right? I'm going to wait till the prices fall with interest rates. Reality of it is that if we go back to 2012, right, 10 years ago, interest rates are getting back to where they were 10 years ago. But the difference now is that inflation is much more higher. Your wages are much more higher. Rents are much more higher. Property prices haven't crashed, right? So much so that there's so many people sitting on the side that want to wait for the bottom of the market. So many people that are sitting there that can't take action because they can't surface at the moment. They could have surfaced a year ago, but they might have just not bought. They may have not been in a position to buy, or they may have been waiting for a better day to come for the market to crash, which hasn't happened. And now they're like, fuck, I can't service. I can't get a loan with the Big Four bank, can't pull out equity, can't do a purchase, can't do whatever the case may be. Imagine what will happen to the market once all those people can come back into the market, right? And that is the opportunity. That's where inflation is really going to take off. That's really going to be the kicker, right? But we're not going to get there until we see more pain. We see more banks blowing up. We see more buy now, pay later blowing up. We see more restaurants blowing up. See a lot more job losses, all those things. We have to see that. We have to see the bush get burnt for the regrowth to come through. There's no more area on the ground for things to grow. So you need to clear that and then let for it to come back. And that's where we're at the moment. You know, it's on fire. Let's just sit there and be strategic and you know, make educated decisions. So, what have we got here? What have we got here? Immigration level and the first rate reduction, whatever that is, will set us off into another little boom period, do you think? Yes, wait until you see that first rate cut, right? That will show that they've lost control of this. They have lost control of it. They can't control inflation. They can't control the economy. It's all out of control. When they show you, when people get the confidence to go, hang on a second, this ain't right, that's when we're going to see, you know, the confidence come back in the market. It's not the confidence that people have to go and buy shit. It's the confidence that people have that their money has no confidence, right? If that makes sense, right? It's a confidence in anything but money. What do we got here? What do we got here? Sorry guys, my arm's long, my phone's right over there, and trying to read from it and get your comments up. Story check out what's left in the account, $180, fill the car with diesel, F-Boss won't pay, complaint on the Monday as a result of the account close. That's how banking exclusion anomaly occurred, something unusual. Exactly. These are the things that 2 years ago you wouldn't have thought you'd be locked in your house, right? 3 years ago, right? You wouldn't have thought that certain things would have played out. And we're in a world where people are starting to question, not enough people, but people are starting to question, but people aren't questioning what's happening with their food, what's happening with the money, what's happening with the bank, right? Anything that I consume, I want to know everything about it. I question it, right? I look at all the food packaging, look at all the ingredients. And actually, here's a little game for everybody, just totally off topic. I encourage everyone to go to their fridge or to their cupboard, pull out 5 things, right? It could be a packet of chips, it could be a packet of salsa, it could be something you think is healthy, whatever it is, right? My sister-in-law and my nephew came over the other week, and I was like, tubes, right? They sound good. and had a packet of tubes, right? And I don't eat that sort of stuff, but I wanted to take a couple because I'm like, this is great. And I was like, this is just me consuming cancer right now by eating these chips. And they're like, what are you talking about? It's not that. I said, no, it is, right? Let's look at the packet. And they go, I said, it's just got these chemicals. And like, do you know any of these products inside that you're consuming? And they're like, no. They're like, it's just potato, isn't it? I said, where's potato on the packet, right? They're all synthetic products that they're putting in there. There's no real food in any of the food that you eat, right? Unless you've seen it come from the animal, come from the source from the ground. You ain't eating, there's chemicals in all of this stuff, right? Your free-range eggs have got the most amount of chemicals pumped through them because they are forced to inject the chicken with the stuff. So I made a joke about it. I was like, no, this thing is so plastic that it'll catch on fire. And I went to the drawers at my holiday house. I've got two houses side by side. I knew there was a little lighter in one of the drawers for the barbecue. Picked it up. I said, look at this. If it's meant to be food, it shouldn't be catching on fire now, should it? And I just lit it and held the tube over the sink, and it went up like a jiffy lighter, right? It's like when you get the fire starters and you throw them in the barbecue, it literally looked like that. And they're like, oh my God. And then they go, what about the packet of Skittles? And I was like, packet of Skittles is one of the most toxic things out there, right? I might have these guys come and say, oh, you're bad-mouthing our food, but go and check what's in there and tell me what you understand is in your food. So if I'm putting something in my body, I want to understand what am I putting in my body. If I'm looking at my financials, I'm thinking, okay, I need to know everything about what I'm investing into, how it all means, what does it add up to. And I guess summing it up is having consciousness of your own to make educated and calculated decisions by questioning and not following by blind faith, which seems to be the problem in the world today. And that's why we're seeing all these problems with bank collapses, company collapses, country collapses, dollar collapses. It's a collapse of the world is what we know it as. But reality is that it all happened because of something. Someone that got sick didn't get sick because they woke up sick. It was a habit that they had or something. And I don't want to go too far into weird stuff that people like Birch, you're losing me here. But, you question it, right? Like someone said beforehand, oh, you're looking fit or whatever, right? I look at pictures of myself from 3 months ago, 4 months ago. I'm like, I was a fat prick, right? I felt it, right? But I didn't think it. I still had the picture in my head of how I was. But I realized it's a sum of all the decisions that I was taking, not moving, the food that I was eating, all those sorts of things that led me to get there. These companies didn't just end up blowing up, right? These countries aren't just blowing up. The currencies aren't blowing up. The banks aren't blowing up. It's all the decisions that they've taken, the actions that they've done to get themselves there. And you should be questioning what is happening with your money. So, what else we got? Most of the time, where are we here? Most of the time, if it's got organic written on the packet, it's a deflection from the shit that's actually in there. Look, anything that's healthy, go and check it out. Check out seed oils. I actually realised, this is way off topic, right? I know this is being streamed to other channels like Birch Feed and stuff, the Decentralized Facebook channel and stuff, which is for that sort of talk. But I noticed that some, I don't wear sunscreen and stuff like that. And it's a very controversial topic. But I was observing kids, families, diets, just seeing what people were eating and stuff like that. And the way that they got burnt, and seed oils that you're eating and consuming in all the food that we're given, right? Seed oils are in all the food. You do not want seed oils. Is a topic for something else completely on health. But the seed oils make people burn more in the sun, which means you need to put more slip, slop, slap on. And I saw a meme today, and it said, for 5,000 years, people weren't gluten intolerant and stuff like that. It's not that they're intolerant to gluten. It's the fact that they're intolerant to glyphosate, which is the chemicals they spray on the food that we're consuming. And there was a test recently done about some fruit that had been sprayed with glyphosate and chemicals. And glyphosate could be your Roundup and stuff like that. And they got this fruit, they squeezed it, pulverized it, and turned it into liquid again, and then they use that to spray the plants. And the plants, it killed the weeds around the plants, right? and it was full organic because the matter was trapped inside every bit of the organism of the fruit and vegetables that they were using for that. So before I digress and go too far further off topic from tonight, I am very, very surprised by what they've done with the interest rate decision. If you're new and you didn't watch the start of this video, I covered off as to where the interest rates are at, sort of my view on why they're increasing. If you want my view as to where they're going, I still believe they're going down. And when they go down, they're going to go a lot lower. The higher that they go, the more that it's going to overcompensate to the other side. It's like if you steer the car at 100 k's an hour this direction, for you to avoid hitting that tree, you're going to have to turn the wheel much further to go this side of the road. So when they're looking at the rates to stabilise the economy, when we want to get at the problem that we're causing today, you're going to have to do a lot more adjustment for us to be able to get to the next safety level. And that's the exciting part, because that's where hyperinflation really kicks in. We're not there yet. We will be there soon. And a lot of people are going to be unprepared for hyperinflation. It's scary. It will affect everybody. I'll probably be scared at the time. I talk about it so cockily, but I think I've done all the right things to get myself prepared for a hyperinflation, which means basically having things that are going to go up in value. The cash is going to go down in value, so that's on the least on my list of things to have. But yeah, take control of your own personal life. Make sure you've got all the things in place for you to, A, to protect yourself, B, to take advantage of the opportunities. In any market, when there's a fear out there or there's an instability, that's where the most amount of opportunity is created. Money goes from weak hands, goes to strong hands. You need to work out, do you have a weak hand and you want to pack in all the cards, or do you have strong hands that want to collect everything off the floor? So on that note, guys and girls, if you need anything, reach out to my team, flick us a DM. There's a link to book a chat with one of my team, with one of my investor relation team if you've got any questions. Some people think, Birchie, you talk some weird shit. That's weird, that's interesting. Sometimes people sit there and think, wow, I just want to buy those properties that Nathan buys so well. But people don't really understand everything that we do. We run an investment agency, predominantly building property portfolios, looking at how we can increase your cash flow and get you to your goals and where you want to be. So whether you're buying assets or whether you've got assets that you need to manage better, we help people, extract as much revenue as they can from their existing assets. We help people finance their assets. We help people restructure their debts and make sure they protect themselves through any sort of market. And ultimately, we help people accumulate assets by buying them below market value and have the strong cash flow and have the good growth in front of them. So, today I actually did my cheapest property of the year. Well, there's two that I did. One was a few weeks ago, which was 12.5 grand or something. But this one, I actually bought up a property today for someone, which was $13,500. 13 grand, 500. That's it. Got 13.5 grand, you can buy a property cash, no loan, own the title, stick it on the wall like it's a photo frame. People have bought dumber stuff for, to put on the walls of their house, right? For a lot more money than that. But you can literally buy a title of a property. This property sold in the year 2000, right? For $26,000 for the same block of dirt. And other properties have sold for $150,000 in the last decade there. It doesn't matter what scale of the spectrum you're on. Just starting out, you've got a couple of bucks, can't get a loan, whatever the case may be. There's things that we can do to keep pushing you forward to help you reach your goals. If you want to get our help, get our advice, get our guidance, contact us. If you don't and you like what we do, make sure you share the video with your friends, give us a like, leave us a comment, and share us around so we know that you like what we do and what I have to say. And we'll catch up soon. Keep being awesome. Have a great week. Bye for now.